Hello and welcome to Reverse Mortgage Reality. Today is Wednesday, October 19th, and we're going to do a deep dive into a reverse mortgage calculator. And we're going to look at different loan sizes, how much can you qualify for? And we're going to compare it to a time when rates were a lot lower this year. And we're going to also compare it to last week, Wednesday of last week. So you can see, like, my goal for you is to see number one, probably the most important thing is right now, how much can you qualify for with a reverse mortgage? And then number two, right after that, well, what's the trend? We know inflation's going up. We know interest rates are going up. How does that impact reverse mortgages? And here's a hint, it's not good. But we're going to, instead of saying high level, it's not good, I'm going to actually show you numbers, show you breakdown that even within 1 week, how things have changed. The third thing I'm going to do, maybe the third, maybe the second, maybe the fourth, at some point in time, I'm going to show you we're experiencing a lot of turmoil in the proprietary or jumbo reverse mortgage world. They've cut the loan amounts, and a couple of investors are actually suspending their programs as of right now. And I predicted this. Anybody who I've spoken with on the phone, I've predicted that this is going to happen as interest rates continue to increase. But it's something we're just going to keep an eye on. And certainly myself as a licensed originator, I have a hawk's eye on all of this. So as updates come up, I'll let you know. But I guess the first thing that we're going to do is I'm going to share my screen and we'll take a look at where rates are right now. So you can kind of see where they were historically, where they were last week, and then where they are this week. So if I can figure out how to do it real quick, let's see if that works. Oh, that's not it. I got to move this over here. Now, if I try it, let's see here. All right. Looks like we're on it. This is the website, by the way, reversequotes.com. If while you're watching this or after you have questions or you want to learn how a reverse would specifically work for you, you can visit the site, just reversequotes.com. Call this 888 number. You can push pause if you want to see it, or you can email me at jason@keyhomelending.com. So let's go to the 1-year treasury rate. I'm trying last week's video. It was the first one that I did on this topic. So we were a little slow, a little clunky, and it took 20 something minutes. I'm trying to get this in and out a lot quicker. You're welcome. So let's take a look at here. This is let's look at this one actually. This is the 1-year treasury rate over, I believe it looks like 6 months about. So you can see that back in, let's see here, May 17th, May 16th, it was 2.07. If we go year to date, actually, you'll see, and this is an index that I kind of compared on, you'll see on a spreadsheet. March 4th, the 1-year T-bill, it had increased a little bit, but this is right before it just increased pretty drastically. So March 4th, it was 1.05%. Now it's up in the mid fours. But let's look at a difference between a week ago to today. And remember what I said earlier, when the rate is lower, you get more money. And when the rate is higher, you get less money. So, and we'll illustrate this empirically again in a minute or two. So let's look here. This is an easier way of illustrating it. This is just a 1-month chart, but if we go down here, and by the way, the majority of these reverse mortgage rates are derived by the 1-year T-bill. Sometimes people call me and say, well, how do you figure out the rates? Well, it's index plus margin, and the index is the 1-year T-bill. So today is October 19th, and they just have stats in from October 18th, but it's basically about the same. If we look back to October 12th, the rates were 4.28%. Now they are 4.50%. So they've gone up 22 basis points. Not a ton, but it's crazy. 22 basis points does make a difference. Okay. So just know, and in the future, you're going to see that in November, the Fed's going to meet and they're probably going to raise it. The word on the street is they're going to raise rates about 3/4 of a point. Well, the overnight rate, which impacts all this stuff kind of down. It rolls downhill, and these rates are derived from the overnight rate. But anyway, they're going to raise it probably 3/4 of a basis point in November and 1/2 of a basis point in December. They're trying to curb inflation, and basically they're hurting mortgages, they're hurting reverses, they're hurting traditional mortgages. And again, as the rates go up, you qualify for a little bit less. So what impact does this have besides just increasing your interest, or what impact does it have besides decreasing the amount of money that you can borrow, and yes, increasing the interest rates? Well, stuff happens here, and I'm going to play this little slideshow. It's just 3 slides. So let's see if I can get this right. I'm going to do this so it gets on the right screen. So these are 3 emails that I've gotten within the past couple of days. Now, I originally blocked out the reverse mortgage company names because although I expected everybody to follow each other, I figured, hey, I'm not gonna punish an investor for getting the word out to their brokers as soon as things are possible. I appreciate when folks communicate information, whether it's good news or it's bad news. I appreciate knowing it immediately. And that's when I work with folks, and if you've worked with me for a reverse mortgage, you understand probably the bad news travels fast. If there is bad news, it'll travel faster than the good news. Although just funded a wonderful person yesterday. We cleared to close her in 2 days after getting the application, and that news traveled very, very fast. That was a record, by the way, fastest I've ever done it in over 460 loans. So anyway, you can read here. This is an investor. I'm just going to call him out now because everybody's done it. If you think about the big reverse mortgage companies that offer proprietary programs, which are basically jumbo reverse mortgages, you have Reverse Mortgage Funding, Longbridge, and then you have Finance of America, AAG, and a couple of other companies piggyback off of the Finance of America AAG product. That's the HomeSafe. So right now, the only proprietary program that hasn't at least notified us brokers that they're dropping the loan to values is Longbridge, their platinum product. I expect them to do so as well, but as of now, they haven't done it. So kudos to them for holding off, or not kudos for them for changing it on the back end and not telling us. So anyway, this is reverse mortgage funding. Again, I redded it out, but now that everybody's doing it, I might as well call it out here. So basically, the bond market's getting worse. What we've seen, and this was back in mid-June, if you were looking at reverses then, and a few of you were, and we did a couple reverses for you guys in June, July, August, May, also in September, like ongoing. But a few of my deals got impacted by this. The same thing happened in June, where they hit pause on a lot of these programs, and they lowered the amount that people could borrow. So RMF is saying they're not really hitting pause, but right now I can't originate a RMF loan at this very second. They've got to redo their loan to values. And then we've got this one, this and this. It's the same thing. This is Finance of America. This is AAG. Basically, there's some pretty big loan to value reductions with Finance of America, and AAG is the same thing. AAG actually suspended. They've stopped their submissions, accepting submissions for the proprietary product. Again, this is what happens when inflation happens. This is what happens when the rates go crazy, and a lot of these investors kind of think that the market has topped. Now, what I will say, though, is anybody who has a proprietary reverse mortgage, by the way, these things are going to go on. They're just going to be at lower loan to values, and I'll communicate that every step of the way. But if you do have a proprietary reverse mortgage, don't worry about it. As soon as you close, you're locked in. Nobody, and this is by contract, nobody can come in and say, wait a minute, I want my money back because I don't like it anymore. So for those of you who closed with me and with anybody else before, don't worry about it. You're okay. You were smart. You got it done. So now so we know this. We know that the proprietary programs they're going to be taking a step down, and they actually already have, as far as what I can see in my pricing software. So let's see. We're chugging along here. Let's take a look. I'm just going to shut this thing down here. Let's take a look. I've got 2 screens. I'm trying to pull up different things that I need to pull up on from both, and hopefully not screwing it up too bad. So let's see where loan to values are this week versus last week and versus March 4th. So we're just gonna go here and boom. All right. So what we did last year, we're gonna do the exact or last week. We're gonna do the exact same thing that we did last week with this. Okay. So this is just a spreadsheet. We're looking at values of historical values and values at 400,000, 700,000, $1 million, and we're going to top out at $2 million. Although the proprietaries do go up to $5 million. But I couldn't put everything in there because you probably don't want to spend 45 minutes watching this video. You have things to do. And believe it or not, I've got loans too. So I've got stuff to do as well. So real quick, we'll look at historical data real quick. If you weren't here last week, what I did was I went over, we briefly touched on it a couple minutes ago, but the one-year Treasury bill on March 4th was 1.05%. Now, last week, it went up to 4.28%, and now it is sitting not so pretty at 4.5%. We see the direction these things are going. I expect next week it'll probably be up at 4.6, 4.7% or so. So let's look at up here at the top, we've got age and we're looking at percentage. We're also going to look at the percentage that you can get out of this stuff too. So we have age of 55, 62, 72, 82, and 92. I wanted you to be able to see kind of how this works at different ages and different home values. And again, that's why I have 400, 700, a million, and 2 million. So on with the show. So at age 55, believe it or not, if you were born in 1967, you can get a proprietary reverse mortgage. It's not a lot of money, but you can get it. So at 55, if your house is worth $400,000, last week you could get 140. This week it's $13,000 less. So you can get about 127,000 bucks. So that's about 32% of your home value. Used to be 35. That's a 3% drop in just 7 days. This is what I'm talking about with the proprietary market kind of getting a little wonky. So that's at 55. 62. All right, let's take a look at age 62. Back in March, on a $400,000 house, you could get almost 40% of your home's value. Last week, you could get, and this is with a hecm. I should write hecm right here. I'll do that next week. So you know what? Hang on one second. My little doggy Lucky wants to get out. I will be right back. Lucky. Go ahead, Lucky. You can get out. All right. Belle might want to get out as well. So let's get back to this. Sorry about that. I work from home. I've got my doggies who they want to be out and about. So last week, the hecm, in March, the hecm was giving almost 40%. Last week, it was giving 30%. Now it's giving 28% at a value of 400,000 bucks and an age of 62. Now, here, if we're looking at proprietaries for the most part give more than the hecms. So the proprietary last week was giving 148, which was 37%. Now it's giving 142, which is 36%. The reason I put this in green was I was just comparing the proprietary versus the hecm. So we just see it's really obvious. The proprietary is giving us more money than the hecm at age 62. Let's see age 72, and we'll go through it real quick. So you can see in March it was giving 44. Now the hecm is giving 139 instead of 1, and last week it was 143. So the proprietary isn't down a lot. It's just down a little bit under 6% or 6,000 bucks. So it's 162 instead of 168. Age 82. All right, 82 used to be, the hecm used to give us 53%. Now it's giving us 45%. So it's the hecm slightly down. And the proprietary, it's still giving more than the hecm, but it's giving 50% instead of 53%. And then again, if you're 92, let's see what's going on here. Let's see, if you're 92, yeah, my doggy's barking because my wife keeps letting her in the room. Crazy. If you're 92, then the hecm it used to give 66%, now it gives 60%. but now the hecm is beating the proprietary. So once you get to your mid 80s or so, then you're actually getting more money with the hecm than you're getting with the proprietary. So that's at 400. Now we're going to go through 700, a million, and 2 million really, really quick. So $700,000 at age 55, your proprietary is giving you quite a bit less. Last week it was giving you 245 on a $700,000 house. Now it's giving you 225. Age 62, the proprietary is giving 251 and the hecm is giving 203, both down from last week. Age 72, we've got 287 for the proprietary, 247 on a $700,000 house, down from 294 and 257. 82, we get older, you get more. So the proprietary is giving 348. The hecm was giving 319, and that's down from 370 and 326. But then look what happens again, mid 80s to 90s, the hecm's always going to win the day. So the hecm is giving you 426, and the proprietary is only giving you 378. So once you get older, it's kind of a switch in thinking, whereas the proprietary is still winning at younger ages, but at older ages, once you get again mid 80s or so, you got to look at the hecm as the program that's going to give you more money. $1 million. So this is where the hecm tops out. So the hecm will top out at the maximum home value is $970,800. So the hecm's value at 1 million and 2 million is the exact same. If I did it right, let's see here. Didn't screw it up. Yes, it is the same. So at 1 million, first of all, age 55, you're getting, last week you're getting 351, now you're getting 320. At age 62, the proprietary is giving 358, whereas the hecm is giving 287, down from last week. You can tell these are all down from last week. I guess I don't have to be redundant. Age 72, the hecm is giving 348, the proprietary is giving 409. It's about 40%, 41%. Age 82, the hecm is giving 446, and the proprietary is giving almost 500, so 498. So it's almost 50% in your early 80s. And age 92, yes, the proprietary is giving 542, but the hecm there's a point where the hecm just takes off like crazy. So the hecm is giving almost 60%, whereas the proprietary is just giving 54%. So you get older, again, you get old, then the hecm might be the right thing to do. Finally, $2 million. The hecm is the exact same because, again, the maximum home value with the hecm is $970,800. So the hecm loan size isn't going to move. But look at the proprietary. From 704 last week to 643, if you're 55, I mean, that's $60,000 in a week, right? At age 62, it goes from 742 down to 713. Age 72, 842 to 815. Age 82, 1.05 to 963. But wait, at age 92, well, we're still down, but it's 1.085 instead of 1.114. So we're dropping. We are definitely dropping. And again, why are we dropping? We are dropping because of this. We went from 4.28 last week to 4.5. So if we go back down to 4.28, we're going to have a little bit of payment relief, meaning you'll be able to get a little bit more. But if we go up to 4.6 or 4.7, then the opposite becomes true. I come to you next week showing you numbers, showing you probably what nobody else is going to show you before doing an application, but it'll be less money. So what's the moral of the story? We know it's just it's not good news. I like to come here giving you like good examples, how to use a reverse, what to do it, use it for, some good stuff. But here it's just, we know interest rates are going up. We know inflation is increasing, which means we know that you're going to be able to get less and less and less over time with these reverses. Not even going into home values, I think in a lot of areas we've topped and we're coming down a little bit due to those high interest rates. And what happens is when interest rates are higher, people can't afford as much of a house, so they buy the house lower, thus which adjusts the entire market down. Now, we will not get a 2008. Again, 2008 is not going to happen. Um, we didn't have bad mortgages written now versus really bad mortgages were written in 2008 for the most part. So we're not going to see a complete crash in home values, but we will see the market continue to soften and drop a little bit. So adding increased interest rates, which causes what you get to drop, and home value dropping a little bit, which causes what you get to drop. My prediction, and I don't have a crystal ball, but it's pretty educated. I've done this since 2008 and kind of watched these things like a hawk. My prediction is that over time, we're going to see the amount of money that you can get with a reverse mortgage continue to drop. So I've given a couple of folks advice over the past couple of weeks. If you're looking at a reverse to do either now, you need it right now, or you're looking to do it within the next year or two, this, even though we're not doing great, we're not doing good, we're dropping, it's going to be, I imagine that what you're going to get out of a reverse is going to be lower in December, January, February, April, and so on and so forth. It's going to be lower than what you can get now. So you should look at it now. I'm not saying it's the right thing. I'm not saying you can qualify. I had no idea, but you should have a conversation, whether it's with me, be glad to help you, glad to give you some good advice, or whether it's with somebody else. Probably won't give you as good of advice as me. I'm just kidding. Well, sort of. You can reach out to me, this phone number, 888-309-9705. Email me, jason@keyhomelending.com, or visit reversequotes.com. And if you want to see this stuff every single Wednesday, I'm coming out with the exact same thing. I'll be coming out with more educational videos. You can see if you've been around the channel, I do quite a few of them in between actually helping folks and actually closing reverse mortgages, because I close quite a few. I'd be more than happy to look at your situation, give you advice on what I think you should do, and then if you want to use a reverse mortgage, if you'd like help, I'd be more than happy to help you. So that's all I got from here. I really appreciate your time. I appreciate you watching this. I have no idea how long it is, but hopefully it was time well spent together. And my goal is, this is the second time that we've done this together. So if you have any advice, give it. Let me know. Are there parts you want that are shorter? Do you want me to explain other stuff? I'm more than happy to. Absolutely. And if there's something you think that could make it smoother, or if it's absolutely perfect, go ahead and comment below. That'd be great. And again, if you want to see this stuff, if you want to see these updates, then go ahead and click that subscribe button and enable your notifications if you can find that, because that'll get you notified every single time that we put an educational video out. All right. I'm going to share Belle with you, because Belle's been sitting at my feet crying. This is one of my dogs. This is Belle. Say hi to the peeps, Belle. Say hi. Say hi. I love you. Can I get a kiss? Can I get a kiss? Can't get a kiss. All right. Well, enough of that. Belle's back down to beg to go downstairs and probably see the kids. So, all right. Thanks so much for watching, and take care of yourself, and we'll see you real soon.